So a client actually came to me about 18 months ago, guys. SaaS founder, I'm not going to mention his name for many reasons, right? And he actually built his business from literally nothing. He's actually, I think he was paying like £550 a month in a spare bedroom all the way up until a few months ago, where he has now actually gone and relocated, and the business has now gone and been sold. Really, really nice news. And essentially within a few years, he was doing over 4 million reoccurring revenue a year. Now, I think it was an American PE-based firm or a British one, basically went to him and tried to buy his company. He actually rejected the offer. And his actual old accountant told him, basically, great news, you're now going to owe HMRC a few £1 million, mate, on capital gains. Now, obviously, his main question was, what can I do about this? And this is a great example that I really, really want to share with you guys about how we helped this client out. And again, it's a really, really nice story to actually listen to. So the answer was yes, you can do something about it. That is what is key here. And by the time he actually finished the entire restructuring program, his tax bill wasn't just, 2.4 million or whatever he was going to pay before. It was less than 200,000. And I'm going to show you exactly how we help this client. Let's call him James, for example. I don't want to say his actual name. But yes, okay. So James was at the time a UK tax resident. He actually he was a single father with 2 children at the time, right? His children were staying with his grandparents, wasn't really struggling, so made a great SaaS business, XYZ, and I think at one point it was more than 20 staff, right? So here's the important part, right? When James actually came to me, he wasn't selling the business tomorrow, if that makes sense. The PE firm essentially made an offer to him that indicated of what he'd actually built, and that's very key here, And again, I think it's over a year and a half, let's say 18 months, 2 years, to actually finish the entire restructuring. And again, that gave us time for him as well. It was much nicer because he was able to continue to grow the business, actually get a larger exit than the original offer, just slightly, didn't grow too much more, but again, it was a fantastic business, which he actually had. So we had time to do this. It took, I think, 6.5 to 7 months to actually reposition James himself, reposition his corporate structure as well. And this is what most founders don't really understand, right? Tax planning isn't something you do when you sell. It's something you do years before. And many people obviously come to us with the situation, hey, I've just gone and done this, and it's like, it's usually already too late, So there's many different types of variations of tax restructuring, personal restructuring, as I'm sure you're already aware about. If you haven't seen other videos in the channel, I've posted a hell of a lot about all of this. And again, I just really enjoy helping clients. You can imagine the network nowadays is really, really nice to speak to so many founders around the world. Again, HPT has gone and expanded. We're now on 6 or 7 employees, and yeah, a really, really nice team, really nice small founder-dependent team currently. And yeah, I really enjoy working with HPT. And again, if you do want to become a client below, you can go ahead and do so. We are not tax advisors, we are not this, we are generally consultants that help entrepreneurs relocate, restructure their companies X, Y, Z around the world. So if James had come to me a week before signing, going back to James, right? There's almost nothing I could have done, literally completely nothing. HMRC are not stupid. They are constantly cracking up on all of these anti-avoidance rules as such, designed to specifically catch last-minute restructures, okay? Not companies that have been restructured properly, last-minute restructures. But 18 months out, okay, we got a fair few options, right? So why didn't James just move to Dubai? Now you're probably thinking, you just moved to Dubai, moved to Israel, 10 years no tax, X, Y, Z, or one of these other zero tax places that everyone is banging on about, right? But James had a few problems. Firstly, it was his family. He also was still, most of his staff were in the UK. He was conducting the company from the UK, and his growth was also key to UK clients as well. So most of the clients that were paying him money on those subscriptions were UK-based residents, right, or UK-based companies. Okay, so his kids were in school, his grandma was looking after them. He actually really, really liked the UK. Now he's actually gone and relocated. But at the time, he was fixed to the UK, right? So timing was very key for him. And HMRC's rules mean mean you need to be a non-resident for multiple years to fully escape UK capital gains, right? And he didn't have that kind of time. So what we did was not relocate James. James, at the time when he sold the company, remained in the UK. Now it's slightly different, but that's a different story. That's another topic, right? But corporate restructuring, that's what we essentially did for him, and that is what was on the table for James. We worked with him back and forth and eventually got him. Potentially, we can get the so-called James on the channel in the future. It's a fantastic story, a really, really nice client, and I've loved working with him over the years, right? But what we did for him was the Isle of Man. Now, most people have never actually really thought about it. It is basically a tiny little island sitting in the Irish Sea between Britain and Ireland, just off the coast of Liverpool. It's a British Crown dependency as well, not part of the UK, and it's not part of the EU. It's got its own parliament and its own tax system, essentially, right? Now, what is the tax system there? And this is why it matters so much. Zero corporate tax on most of its income, including capital gains on share disposals, not withholding tax on dividends, and various other special treaties as well. Again, it has a very strong, solid tax treaty network, double tax treaty network within the UK. And again, it's OECD whitelisted. It's not some dodgy blacklisted jurisdiction that's going to cause you problems. Yes, there's levels of asset protection. Yes, it hasn't got the levels of asset protection such as other locations around the world. But this is what most people think wrong. The Isle of Man is really about true economic substance, if that makes sense to you. Been great. In UAE, we say position of economic management. You can't just register a shell company and think you're done. You need actual directors on the island, actual decision-making happening there, and actual operations, right? That is what is key here. And that's not a bug, that is a feature. Simply speaking, you know, it is what it makes it defensible and properly structured, is having that local presence on the island, if that makes sense to you guys. So what we built for James was very actually simple, very cost effective. And we actually set up an Isle of Man holding company. And I'm making this video today because we were actually speaking with a client the other day, a very confidential deal, a family worth over, 100 to 150 million pounds, and they're just exiting the UK over to Israel as we speak and doing something very similar, because this is the most common thing to go about. I don't know if you've been to the Isle of Man, but you'll probably notice there's a lack of very nice restaurants or the amount of funds that are held there, right? So let's go back to James's holding company, which we made. Let's call it James Holding. Can I just say the client is not called James as well? So it's properly incorporated with local directors and board meetings held on the island with its own bank account. Its real office with the lights on, very key information there. And it had general commercial substance. It was, ticked every single box. We double-checked with everything with 3 different legal counsels, and they said, yes, this is great. We confirmed with James, and we went ahead with the solution. Over 6 months, James, or I think it was less than that, I think 4 to 5 months, he basically transferred all the shares in his operating company into this new Isle of Man holding company. We did this through a share-for-share exchange. It's a well-established mechanism that, when done properly, doesn't trigger an immediate UK tax charge, okay? And what was the result? Again, when the PE firm acquired the business, I think it was 15, 14, 16 months, whatever it was, under 2 years, but more than a year and a half, I think it was. They weren't buying shares from James personally. They were buying shares from the Isle of Man company. And the Isle of Man companies don't pay tax on capital gains. So let's speak about the numbers, what actually happened there, okay? Because this is where things are very interesting. Without the restructures, from the sales proceeds, it was about 12.5 million, right? On base cost, basically nothing. He founded the company. So great, fantastic success. I wish my company was worth 12 million as well. Maybe 1 or 2 bobs, but not 12, maybe one day, guys. But again, capital gains on 12 million is not attractive at all. It is around 20%, which would be about 2.4 to 2.5 million, something like this, right? That was what the figure we were previously looking at with this client called James. Now, when he actually sold the business, he sold it to the Isle of Man holding company, and there was a fat 0 capital gains on that figure. And this is because of the economic substance that he generated within his holdings over there. So instead of actually paying 2.5 million, right, he ended up paying a flat zero on that exit. Now, yes, at the time he was still a UK tax resident, but what this allowed him to do is control his timing. So he took a nice modest salary, took some dividends, X, Y, Z, and he actually ended up paying, top of my head, just over £200,000 in tax while he was still actually remaining in the UK. Now James is gone. Yes, his holding company still exists. He's onto a new project right now, building some new company. From what I believe, we're still in contact. Hopefully I'll get to see him over the upcoming months again. So essentially what he did, he then distributed the dividends across multiple tax years, basically stayed in lower taxes, and he didn't need too much to survive. He wasn't living a flashy lifestyle, wasn't doing this, wasn't wearing a hat that says the struggle is real for sure. And the net tax paid over 5 years was literally less than £250,000. Now that is saving over £2 million in taxes, legal, compliant, and fully disclosed to HMRC. So again, there's lots of things you can do. We have Guernsey, we have Jersey, we have Luxembourg, we have Liechtenstein, we have the Cayman Islands. We have many solutions, but what is very key is it is all case by case, okay? Now, I want to be really clear. This does not work for everybody. There were specific timings that made this viable for this client called James, okay? He had, an 18 months period where he was able to restructure the business, essentially. Now, if you're signing a deal next week, we cannot help you. So please don't email me saying, hey, can you help me? I've just sold my business. You're too late, mate, okay? Now, what's also very important here, as I mentioned prior and previously in many videos, is economic substance, position of economic management. Real directors, real decision-making on the island. That wasn't a brass plate on a door somewhere. Very key, okay? So we worked with, the actual two partners from one law firm in the Isle of Man. UK tax advisors were also there in the background as well. Corporate finance specialists. It was not a DIY project. I think all in all, it costs him between £20,000 and £40,000 a year to maintain this solution over there. But guess what, guys? He has saved over £2 million. And full disclosure, everything is reported to HMRC. No hidden structures, no nominee games, no funny business. There are real directors on the island making true economic decisions, okay? So transparency is sometimes what can make it defensible. Yes, if you're living in certain countries, such as myself, it's very easy to have a foreign company. There's no CFC rules, for example. I'm going to make another video going into Hong Kong, and also a few other topics around the world of how I've gone and done it myself. I have two companies that generate multi-millions a year. Between them, at least $500,000 into XYZ. And if you're just thinking of a quick Isle of Man company to avoid tax, that is not how it works. Please do not think that. Again, this is not legal or tax advice, XYZ, but do not just think that. There has to be real economic choices on the island. And essentially, that is how we help clients. We connect all the parties together. We design the solution for you. We triple check the solution with those legal advisors, then we go ahead from there in a very cost-effective manner. So look, if you're a founder and you're thinking, I want to exit my next 1 year, 2 year, how much is my business work? It is time to start planning now. Very simple. Not when you've got a term sheet in front of you, if that makes sense. So we work with clients across the UK, Europe, internationally. We've worked with clients from Nigeria. We've worked with clients from UAE. We've worked with clients all over the world, even Americans who have renounced their passport. Very common. Currently dealing with 2 clients right now in 2 different projects that we're involved with. Both Americans have gone and renounced their passports, got their second citizenship plan, which we can also then go ahead and help you do. So if you would then like a conversation about this, there's a link in the description. I'm not going to sell it to you, but just thought it'd be a great video to explain what we did with James and a really, really beautiful story. So over and out, guys, I will see you in the next video. Over and out. Cheerio. Bye-bye.